Good morning. It is Saturday, June 28th, 2025. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital on YouTube. You can also find me on Substack. So we're talking gold today. As you can see, I've got some drip on. This is a gold-plated mala that I had custom made. Don't ask. No comments, please, in the comments section. But sometimes I like to break it out when I've got something to say about gold. So let's talk gold, and then we'll talk gold miners and sort of what happened there last week, sort of my take on the price action and how things might unfold over the rest of the summer. So this is an excellent blog post. Inflation's 5.31 year cycle is bottoming. So Tom is making the point that inflation moves in a wave, a cycle pattern, basically. Just like there's market cycles, there's weather cycles, there's cycles to everything in life. Inflation also has a cycle. And you can see that the last time inflation cycle bottomed was basically in 2020. And then what happened over the next 2 or 3 years? We had a big surge in inflation. So the last time this had an up cycle and then a down cycle, this wave pattern worked like a charm. It doesn't always work perfectly, as you can see just looking back here, but it's pretty good. It works pretty well. And one thing that I notice here is when inflation starts trending up, it tends to make a series of higher highs before getting broken by a financial crisis, right? Like early 90s, 2008, 2009. So what would concern me about this one is we just had a huge upwave. What about the next one? Right? So it's interesting. This is definitely food for thought, and everything indicates here that inflation should be bottoming this year. Based upon a lot of the data we get, inflation is still gently trending lower. We're still not quite at that 2%, but we're getting pretty close. But then Tom says we can expect an upward bias to inflation during 2026 and 2027. So what does this have to do with gold? Well, if this plays out, I mean, even if it's half accurate, we don't have to go back to 9% or 10% on the CPI like we hit in 2022. But even if we go to 5%, that would be a big deal, right? And there's lots of reasons. I mean, you could make up a lot of reasons why the price of energy could rise again. The price of all the goods we consume could rise again due to making more things in America, right? And protectionism around the world, to onshore manufacturing, to onshore everything, including services, will cost more in most countries. There's a lot of reasons why inflation could bottom in 2025 and start to move higher again. Also, easier monetary policy. So if Trump gets his way, that Jerome Powell is the dumbest and most destructive person in government and costing our country hundreds of billions of dollars, well, he's going to replace him in 2026, possibly sooner, but certainly in summer 2026, he's going to replace him with an accommodative, dovish Fed chair. You can count on that. Maybe it's Christopher Waller. So what if we have inflation starting to just begin to move up again in early 2026? Trump gets his guy in the Fed. Fed and Treasury work together to reduce interest rates and sort of rig the yield curve as much as they possibly can. Dollar likely falls further, almost surely, because if you have artificially low interest rates for a currency that's running higher inflation, You're not going to want to own that currency. That's just basic economics. So this is this is setting up. We're not there yet. Powell's still the Fed chair. Fed funds rate is still 4.5%. Inflation is still pretty modest. We're not there yet, right? So it kind of makes sense that gold is cooling off here in June 2025, right? We know all the things about the fiscal deficit and the total government sovereign debt and unfunded liabilities and Asian central banks buying and the de-dollarization. We could go on with the bullish case for gold, right? I could spend hours on it. But just understanding that inflation is still pretty modest. We have pretty tight monetary policy still here in the US. And there's no financial crisis. Despite what happened in early April, there's no crisis. So it makes sense that gold is pulling back here, actually, right? There's no driver to urgently propel gold above 3,500, right? But that catalyst could arise later this year or certainly in early 2026, right? So, this blog post, which is free on my Substack, delved into why Trump is so angry at Powell and the problem that the U.S. faces in refinancing, I don't know, $9-10 trillion of debt later this year. I mean, it's not even later this year. It's like August, September. Like they need to refinance. They need to issue a lot of new Treasury debt. That's why the big, beautiful bill is so urgent. That's why Trump is pushing it for it to be done by the 4th of July. Like all of these self-proclaimed timelines from this president, right? He always sets a number within 2 weeks, next week, whatever. He likes to throw out a buy when. He's a businessman. I mean, when you're in business, you think in buy when because time is money, right? If you can't just say it's going to happen at some point in the future. That's not that's not the mind of a businessman. The mind of a businessman is, I need it done by next Friday. Let's get it done by next Friday, right? And then get it done, right? But he throws out these time frames, and almost invariably they're wrong. It doesn't happen according to the time frame that he throws out to the press, right? But in this case, he needs the big, beautiful bill and the debt ceiling to be raised in order to deal with this situation, for the Treasury to deal with this situation, And he's infuriated that the Fed funds rate is not under 4%, so he can so that Treasury Secretary can refinance at a lower interest rate and save some of the interest payments on the gargantuan outstanding Treasury debt, right? So they're doing all these different things, rule changes to the supplementary leverage ratio in order to encourage large banks to own more treasuries. They're doing the stablecoin bill, so all these stablecoins will be in USD, and they will hold U.S. treasuries to maintain their peg, right? To the one-to-one stablecoin peg, right? They're doing a whole bunch of gimmicks, including making the Japanese buy more treasuries, making the UK, which is already a heavily indebted, weak economy. I mean, it's really like, this is Ponzi economics. I mean, UK and Japan are two of the most indebted debt to GDP nations in the world. UK has an ailing economy. Japan isn't much better, quite frankly, although it's improved, recently. And they're going to be big buyers of our debt, right? Great. it's like getting 4 people together who all have overdrafted bank accounts, but they still have some credit on one of their credit cards, and they're like, well, I'll take a cash advance on my credit card, and you can take the cash and bring your bank account back to positive, and then you can, and they're just swapping debt to one another to kick the can for another month, right? It's insanity. But this is where we're at, guys, right? And this is where we're at. And so whenever you question, and then also I love this chart from Citi because like this is so on point, right? This is looking back 60 years. But this is history. This is important history for all of us to really understand very well. All of these key moments in time, the Volcker shock, the end of Bretton Woods, the Paris Accord, the Louvre Accord, right? 9/11, global financial crisis, China devaluation, COVID, America first, and notice where its placement is. This is the America first dollar bear market, and it's just getting started. It's just getting started. So I really want to ensure that all the viewers are super clear that we're in a US dollar bear market. And it could be polluting your mind and costing you money to listen to people trying to call a bottom or a trading bottom. Yes, the dollar will have 1 week or 2 week rallies. Of course, markets don't go in a straight line like it did in April. It's going to bounce. But the big picture trend, the trend that's actually going to save you money or make you money is from the top left to the bottom right. This is a downtrend. And when you have a president, and I'm not blaming it all on Trump because, like even if we had a Democratic president, it wouldn't be different. The dollar would be going lower. But this is who we have right now. It's this guy. And this is a U.S. president who is calling the Federal Reserve chairman that he appointed in 2017 a stubborn mule and a stupid person that is making a big mistake. Wow. Then he says, get this guy out, and whoever is in there will lower rates. So he's broadcasting that he has no respect for Powell. He wants him out, and whoever he appoints is going to be appointed because they will promise to lower interest rates. Big part of the Federal Reserve and monetary policy for any central bank is credibility and independence. This commentary and his repeated statements signal no independence, and whoever's coming in is going to be a rigged Trump proxy Fed chairman, right? So it tells foreign investors to run from the dollar, just run from it. And so what are the alternatives? I mean, number one is gold, right? Number one is gold, maybe silver, maybe platinum, but gold is so far above the other metals, it's not even close, right? Yeah, you might diversify. If you put 4% of your net worth in gold, you might put 1% in silver, you might put 0.5% in platinum or something like that. The degens out there like me might put 20% in gold and 2% in silver and 1% in platinum or something like that. But it's going to be like that kind of allocation. You're going to own a lot more gold, right? Because gold is super liquid. Gold is the thing that central banks buy. Gold is the storage asset and the pseudo alternative currency. Yeah, I mean it's the number 2 reserve asset behind the dollar now, right? So it is literally as good as gold. A shout out to SorentheK. I think his analysis is spot on. Like this statement by Trump, and I know he flip flops. Like if Powell cuts 50 basis points like a month from now, on August 1st, Trump might say Powell's the greatest Fed chair in history and he loves him, right? He can flip flop like we saw with Musk, of course. And some of what Trump does is an act to try to get an outcome, right? But in this situation, this is beyond an act at this point. This is months of bullying and badgering Powell. You can't take back the damage that's done. It's one thing to say a one-off or twice off statement and then flip-flop back to, I respect him, I think he's great, right? But this is too far gone. He's throwing Powell under the bus, and yeah, I think you guys get it. But shout out to SorentheK, great content, great post here on the inflation 5.3 1-year cycle. Definitely check that one out. And yeah, so why are yields falling? Well, inflation is moderating, right? and also this prospect that all the issuance that's coming is going to be jammed at the front end. So they're gonna rig it so that just they place whatever 3 month, 6 month, 9 month bills at the front end. So the market is starting to say, well, there's not going to be as much new supply at the long end. So we're seeing the long end get bid a little bit, but this is artificial, in my estimation. And certainly, if inflation does U-turn and start to move back up, and Trump gets his guy in, well, long end yields could go quite a bit higher. The 10-year could certainly go above 5%. Turning back to gold, look, we got to look big picture here. There's obviously the last 3 monthly candlesticks have these little wicks at the top. So 3,300 is resistance on a monthly time frame. Yeah, like 3,509 is the all-time high, but that was a spike high, right? The resistance on a monthly closing basis is actually 3,300. We closed, this says 3,273, but actually we closed above 3,280 on Friday at the very end of the day. Monday is the last day in June. That'll be an interesting trading session. That'll be really interesting. 3,250 is the next support. 3,300 is a key monthly closing level. What's gold going to do on Monday? Let's watch that. That's really important. But big picture, like I said, it makes sense that gold is cooling off. It could cool off for another month or two, and I think that would be totally normal. And in the context of the gold producers, they're about to report, starting at the end of July, easily their best quarters in history, with average realized selling prices above $3,250 an ounce. Maybe some companies will even get close to 3,300 if they were really good with their timing on sales. So the fact that gold is consolidating, whatever, 3,250, 3,300. I mean, even if it dropped to 3,100, these companies are hugely, wildly profitable. And every day above 3,000 is a good day for the gold mining sector, where their balance sheets are getting stronger and stronger. They're accumulating and hoarding more cash, which will be utilized either in share buybacks, pay dividends, or make acquisitions. I think they'll do all three in the second half of 2025, and we'll start to hear more about those acquisitions probably come September after Labor Day, right? June is just often a very weak month for gold. The last 5 years, it's down every single time. Are we going to get a sixth one? Maybe. We'll actually the last 4 years. So this will be number 5, and yeah, it's looking like it's going to be a red month, slightly red. But actually, if gold goes up on Monday and closes above 3,300, it'll be a marginally green, month of June. But look at the seasonality next month. In July, gold is often higher, and higher by a pretty good margin, right? The last 20 years, it's higher 68% of the time for an average monthly gain of 1.6%, making the month of July basically the second best month of the year after January. Silver, this is a very healthy consolidation. I see a lot of drama and emotions on X, on various social media platforms among silver bulls. But guys, we went from, 28 in early April to 37. So that's 2 months, silver was up over 30%. I think that's a great move. So a consolidation above $35 an ounce is wildly bullish, wildly bullish. This is fantastic price action in silver. Okay. I am not negative at all on this little pullback. Okay. So let's be clear about that. AEM. So just like I said, like the problem with these big producers now is they've had a very big move, right? They're starting to price in maybe $2,700 or $2,800 gold. They're certainly not pricing in $3,300, but they're starting to price in a higher gold price. And the big ones like AEM, Newmont, Barrick still have growth challenges, right? So Wall Street, every quarter, they realize, oh yeah, these companies have trouble growing. Yes, they have a big profit margin per ounce of gold extracted, but they still have growth problems because it's very difficult to build a new mine and then get it up and running smoothly, right? So I think a consolidation here, even in the best ones like AEM, like Kinross, KGC, is totally normal. In fact, Kinross was just at an all-time high Monday morning. Newmont was just at an all-time high on Monday morning. So we're the producers are actually outperforming the gold price, right? Because the gold price is still well off its April high, but the big senior gold producers are just coming off of a 52-week high, whatever, down 8% or 10% from their respective 52-week or in some cases all-time highs, right? Now, final topic, Perpetua and Vizsla. I bring up these two, well, because they're juniors, right? They're both in the feasibility permitting stage. I mean, with Perpetua, they have their permits. They're ready to press the green button on construction, which they're obviously going to do. Vizsla will produce a feasibility study later this year and then likely press the green button on construction next year. So what happened here? They both made new all-time highs in June. Literally, they both did. And then proceeded to borderline crash. Why? Oh, financings, right? So yeah, the gold and silver price fell, right, in the last couple of weeks. But yeah, that was part of it. But the bigger part is that Perpetua did a US $425 million financing, right? And this was priced at $13.20 per share on the NASDAQ, right? So, what happens is the company sees their share price trading up to 17. Obviously, they know they need to finance for construction as part of the total package. They have $2 billion in project financing from the Import-Export Bank of the United States, but they still need some hard dollars and cash for their operations, right? So they're going to raise portion of it in equity, and then the lion's share is debt, right? So after they close this and they secure this $2 billion in loans, they've got a fully funded package for the construction of Stibnite, right? But the main thing is the pricing, right? So they priced it at $13.20, and obviously it was priced on this day and then announced, and then it gapped down, right? So this is a sign that the market gave a signal, right? The wisdom of the market gave a signal as to what price the market, the broader market, all the investors, and the wisdom of all the investors were willing to finance Perpetua at, right? And that was at a pretty good discount to where it had been trading the week before, right? So that's number one. Vizsla, pretty much the same thing, right? It traded all the way up to 360 in the US, and then they announced a US $3 financing after the close 2 Fridays ago, right? And then obviously on Monday it gaps down, and then it continues to trade lower because it's the financing is kind of a shock to the market. The market was trading above 330. They finance at $3, so the market comes down to the financing price, and then gold and silver continue to sell off throughout the week, and Vizsla trades under the financing price. So you have two companies, two of the highest quality juniors out there, gold, silver, and antimony, and two of the best projects, in the world, quite frankly, held by juniors. And now they just closed huge financings. They're all cashed up, and they're trading under the deal price on both respects, right? And so this will be interesting to watch, because if the bull market is really alive and well, we should see both of these stocks trade back up to the deal price, or maybe back above the deal price, in the next few weeks. All right, so that'll be interesting to watch. If they continue to trend lower, obviously that would be a more negative signal. But notice also, everything is priced in US dollars here, and even Vizsla, which is in Mexico and listed in Canada, well, they're also on the NYSE, but it's a Canadian company. They price their deal in US dollars. So this is a sign that large US investors, so institutional investors, are getting into gold and silver miners here, right? And they want to participate in these big financings. And really, if this was tech or biotech, 400 million or 100 million is not big money for those sectors. But in junior mining, 425 million US dollars is enormous for a junior to run to raise. 100 million, right? That's big money in a junior mine. That's really big money. You don't see a lot of $100 million financings. Well, now we're starting to see more of them, right? And I don't take this as a sign of a top. I think this is a sign of a very healthy bull market. And yeah, we're going to need to digest this and some other financings. It might take a couple months, but bigger picture, this is a very good sign that capital is flowing into the junior mining sector, and in particular, flowing to the best projects and the best management teams. Have a powerful weekend and enjoy Canada Day.